Today's webinar, Scott is going to review the loans and hopefully we have some time to cover prepays. We'll see how many questions we get, but there's definitely going to be a lot of discussion around loans and how to set up loans, how to record loan payments with principal and interest, and also do record borrowings on the loans. Prepays, if we have some time there, we should have some time to cover prepay expenses and how to offset prepays with your input deliveries this spring. And also there'll be some discussion around balance sheets. Just for visibility, and we'll be touching on this chart throughout the day just to make sure everyone's on the same page in terms of what tiers these features fall under. So when we start covering the loans and the balances and the reporting of the loans, really you can do all that within all three tiers. So it doesn't matter if you've got the basic, plus, or pro. The stuff that Scott's shown you regarding loans can be done in any of those tiers. But once we get into prepays and managing the prepay expenses and deliveries of the prepays, that is a feature that can be found in Plus or Pro. So if you have just the basic, there is really no way to manage your prepays with just the basic level. So you definitely have to have the Plus or the Pro to do that. Scott, I'll let you take it from here.
Okay, for loans, I'm going to kind of go through a situation. So the scenario we're looking at, and I'll flip back and forth between traction and this as I do it, but it's 2026. We're up and going with traction, and we bought a new tractor for $250,000. I'm going to throw in a trade with it, just knowing that that's fairly common. We're going to say we're going to borrow $200,000. So we're taking out a brand new loan, borrowing $200,000. We're going to have a down payment on it. So what I'm going to show you how to do is how to set up that loan, how to record that transaction, and then we're going to go out and record a payment on that loan, and then kind of show the end result with our new loan report and show how it shows on a balance sheet. So with that, I'm going to switch over to Traction. So the first thing I need to do before I can record that transaction, I've got to set up the account for the loan. So to do that, I'm going to go to the chart of accounts, and I'm going to filter it down. The entity that I'm working with here is Stark Farming. So in the chart of accounts, I'm just going to set that to Stark Farming. And I want to set up, this is a term loan, so it's going to have a term that's out there of more than 1 year. So that is going to go into these non-current liabilities. There's a section here, notes payable long-term. So Stark Farming right now doesn't have any long-term loans set up. So I am just going to go over here to the right, click on that little button, and I'm going to add an account there. And it is Stark Farming as the entity. My account type here, this is an equipment loan, so I'll pick out note payable equipment. The name of the loan, I'm just going to call it my 2026 JD Credit Tractor Loan. So the name you use here, this name is going to show up all the places like my balance sheet, my loan reports, things like that. So think about it being descriptive so you can recognize what the loan is, but also remember that any reports, balance sheets I print out will have that name on it. So this is asking for the opening balance, my case back as of January 1st, 25. Well, I didn't have that loan then, so that is down here. The balance is 0. But the important part I'm going to do is I'm going to go to this details section, and I'm going to enter all the details related to that loan. Now, the thing to say, if you don't have all these details, you can save this without them and go back and put it in later. I'll show you how these details will get used. The details get used to break out principal and interest on the loans if you don't know it, and it helps on the balance sheet reporting side of it. So again, you don't have to do this, but if you've got it, it's kind of nice to get these set up now. So I'm going to say that original loan, if I flip back here, we're saying it was a $200,000 loan. So it's 200,000 and not 20,200. We're going to say the interest rate is 7%. The start date on this, we're going to say it was February 1st of 26 is when we took it out. And the term on this loan is a 60-month loan. So it is figured when it gets paid off. I'm going to say the payments are monthly here, and it'll calculate the payment. Now, we're going to calculate all the payment based off the values here. A lot of times that may not be the exact amount. You can change the amount if it's slightly different. You probably want this to match what you're actually paying on it. And once I've got all that information, I'm just going to save it. And now that loan is showing up there. So my 26 JD credit tractor loan. So the next thing I'm going to do is we're going to record the transaction where I actually bought that equipment and took out the loan. So how we're going to do that is that loan, in this case, it requires me to have a down payment for $10,000. So I know in the end, I've got to record a payment to my checkbook. So for that, I'm going to go to my account register, and I'm going to select the checking account that's being used, and I'm going to add a new payment in here. My payment amount is $10,000. And my contact is going to be the bank or whoever I'm buying from. In my case, I'll say it's John Deere Credit. I'm now just going to work my way down here. So the first thing I know is I need to add a new tractor in there for $250,000. So at this point, I'm not going to actually add the piece of equipment to the equipment area. You would probably want to do that also. In my case, I just want to get that $250,000 added to my equipment account. So if I go to my accounts, scroll down in my assets, I've got a farm equipment account. That's the account I want to add it to. And it is actually the amount is $100,000 there. So next thing I know is I've got to have the trade in. So in my trade in, I can see is $40,000 I took off of this. Now, the easy button for recording trade-ins, the other part in this description. My description, I would type in here, new JD 26 tractor. You're probably going to want to be more descriptive. Make sure that description's telling you that's the cost of the new tractor. So in my case, for the trade-in, the way I'm going to do this, I'm just going to pick that same farm equipment account because that trade-in is in there. And I'm just going to put a description less trade-in. Maybe 2010 tractor, a description of that trade-in, and I'm going to do a minus 40,000 for that. Now the key to this trade-in, that trade-in's probably got accumulated depreciation on it. There's also might be depreciation expense on it. If you know all that information, you can break it out in this entry. And I know we've got a knowledge base article that takes it through it. However, I know a lot of times you may not know that because your accountant keeps all that details out there. So the accountant, what I would tend to do is just put that 40,000 as a negative to your farm equipment. At the end of the year, when you go actually talk to your accountant, let him know how you did it in Traction, and he's going to come back and do a journal entry to fix it for you or help you fix it. So this is kind of the easy button to get the transaction recorded. I see a question, what's the 100,000 for? The 100,000 we will see as we get further out is not 100. You were right. I typed in a wrong
Yeah.
value there. Sorry about that. That should be 250. Good
Well,
catch.
I think Scott, if you look at your down payment amount in the upper right
Should be
corner, I think you put an extra
10,000.
zero in there. Yeah.
Yeah, I did. Fat
Wasn't
fingered
sure if
this
you were doing that on
morning.
purpose, Scott, or what. Yeah.
No, no, no. I'm fat fingering it this morning, so good catch. So no, 10,000 up here and 250 for the tractor there. Sorry about that. So the next step I've got here is 250 minus 40. Our next step, we know we borrowed 200,000 on the loan. So I will add a row there, go to my list of accounts, and in my liabilities, right there's that new tractor loan I set up. I'll just put a description on there, whatever you want in there. And that one is, how much did we say it is? It's minus 200,000. And look at that. When I'm all done, everything balances. So it all works out. So we got a new tractor. How'd I pay for it? 40,000 was a trade-in. 200,000 was the borrowing on the loan. 10,000 is a payment. I'll just put a memo down here. and just save and close. So that now has got, if I go look at, this would have added that equipment on. It's going to add the loan on. I'm going to go one step more with that loan. Let's say now we've got a payment on that loan in February. So it's later on in February, and I screwed up the date on that too. I really wasn't paying attention. That date should have been back on February 1st. So we'll say I've got a payment now. It's March 1st, and I've got a payment that I need to make on that loan. So adding a payment, I'll just add new payment. My contact is going to be the bank, whoever I'm paying. So in this case, I'm saying it's John Deere Credit. This part's the easy part. So down below, I can pick notes payable here. I pick out the tractor loan. The program is going to calculate the principal and interest. Now, this is one you're going to watch also. Sometimes the bank calculates things slightly different from the way Traction does. So if the principal and interest amounts that they billed you for are different from this, just change them to match what they did. So Traction always going to do its best to calculate it. If it's not right, it's no big deal. You can change it here. Last thing I'll do is just put in a memo there, March payment, tractor loan, and save and close. Looks like I do need to create an interest expense account. I'm striking out all around this morning. Sorry about that. So now I've got that payment in there. So the next step I'm going to do is kind of introduce. We just did, if you paid attention last week, there was an update and we added a new loan report into Traction. So if I go to the reports area and go to accounts and go into the cash area, this loan detail report is out there. So this loan detail report is designed to show you all of your loans and all of your loan activities. So I'm just going to restrict this down to start farming. And when I update that, what I'm going to see on start farming is that, I'll cut it back a little bit, turn off this loan detail. So what it's going to show is a running balance on the loan. So I've got a date range January 1st, 26 through today. It's going to show all the borrowings, all the payments, and then the totals on it. So my case isn't very exciting. I've only got one payment. What this will do is I go through the year. When I get to the end of the year, I can see what the total principal, total interest paid on that loan kind of shows me how the balance flows through. One of the nice features on this loan details is something you can toggle on or off. So when I toggle it on, an update is going to show me all my loan details on there. So this is a way you can also see exactly how I've got those loans set up out there. In my case, Start Farming's only got one loan, so I'm only seeing one loan. If I pick multiple entities and get multiple loans, what it'll do is give me a list of all the loans, and then down below gives me the total for all of them. So at the end of the year, this will kind of give me my total interest for all the loans out there to kind of see that information out there. Other thing you can do if you've got a huge list, say maybe my line of credits I don't want to include on this loan. So if I only want to do it for my long-term loans, this account filter lets me filter it by whatever accounts I need. So right there, by taking the short-term loans out, lets me filter it. So report's pretty easy. You can do a lot of different things with it. Again, just like all our reports, I can print it. When I print, I can save as a PDF. I can export it as a CSV file if I want to take it into Excel or do anything like that. So I'll open up real quick. Any questions on what we've done so far? Easy peasy so far. Okay, so everything I've gone through so far, every level of Traction has Basic, Plus, or Pro. The next step I kind of want to talk about is only available if you have the Pro version. So the Pro version, if I go in and either look at an accrual or a market value balance sheet, I'm going to do a market value balance sheet, and I'm going to narrow this down to just my Stark farming. So you may have noticed this or you may not have. When you look at your market value balance sheet, there's going to be a line in here for current portion of long-term debt. And down below, when I look at my long-term debt, I'm going to see all my loans listed with a negative current portion of long-term debt. So what Traction's going to do, when you do balance sheets, most of the time the banker really wants to see what's the total debt that's owed over the next year, along with any that's owed beyond next year. Well, anything this year is typically going to be your operating loans, any short-term loans that you have that have to be repaid this year. But the bankers also like to see of all your long-term debt, how much of that is going to be repaid over the next 12 months. Traction's got a feature built into it. As long as you fill in those loan details, those loan details being the interest rate, the term, the payment amount, things like that, Traction will do all the math, figure out how much will be repaid over the next year, and it automatically adds this line in there for you. So in my case, I had all those details set up. Everything shows up just fine. If I was betting, I'd bet some of you probably have done these reports, and the accrual balance sheet does the same thing. If I switch this and get a different entity, not just start farming, I get this error message. The error message says the following loans are being excluded from the current portion due to missing details required for calculating the repayment. So this is telling me I've got some loans that were set up in my chart of accounts that don't have those details. So if you want to get those right, you need to go back and put in the details for those. The other way you can find those loans, real easy way to do it, this loan detail report. If I go back and do this for all accounts, for all entities, this report will also show me any that are missing it. So if I pick BNS Farms 2, and do all my loans, this will show me, looks like this Mortgage Johnson farm is the one that's missing the details. So if I want to get rid of that error on my balance sheet, all I need to do is go back to the chart of accounts, find that Mortgage Johnson farm, edit it, put in the details. Maybe the original is 200,000, it's 10%. Once I've got those details in there, if I now go back and look at that report again, I'll see that error message is gone because it's now being filtered in there. I see the question market value is only available on Pro. So yes, you've got to have Pro to get the market value or accrual balance sheet. So I'll open up real quick before I go to prepays. Any questions on loans? Any questions on that new loan detail report?
Yeah, feel free to unmute yourself if you have any questions, or you can just use the chat. Yeah, I'm not seeing anything, Scott.
Cool. We will move on to prepaids then. So I'm going to stay with this Stark Farms that I set up. It is kind of a simple entity. It doesn't have a lot in it. So I'm just going to go in and look. So prepays, this is something you've got to have at least the plus level of traction on. So if I go to my prepay expense report, Stark Farming, there's no prepays in there. So we're going to go through a situation. Let's say we're writing a check. Maybe it's back in December of 25. We wrote a check for some prepaid fertilizer and prepaid seed. So I'll go to my account register. I'm going to add a new payment in here. My date, we're just going to set this back. Maybe it's the last of 25, December 31st, 25. I bought this from Farmers Co-op. First thing I want to do is we're going to say we had $60,000 of prepaid fertilizer. So when I click on the drop down, I've got a prepaid expense item. I'm going to go to my account and say it is fertilizer and lime expense. So if I previously did a prepay with this vendor for fertilizer, I could select it out of the list. In my case, I've never prepaid fertilizer with them, so I need to add a new one there. So we will create a name based off that for you. That name to me, I'm just going to leave that as it is. And we're going to say that it was $60,000. In this same check, I also did $40,000 of prepaid seed. So I will just add a row there, go to prepay expense, pick seed expense, and pick not fertilizer and lime. So I will make a new one here. And this one is going to be seed expense and 40,000. And go ahead and say save. So if I scroll down to December, that $100,000 check is now out of my books. So to kind of show you what that did, first thing I'll see if I go to accounting, go to my accrual prepaid expense, I will see right there my two prepays. The second thing is for taxes, those really need to go to seed expense and fertilizer expense. So if I go to my reports again and kind of show how that works, let's go ahead and say narrow. I'm doing a cash income statement. I've already got the date set. We'll set it to last year and update reports. So if I go down to fertilizer expense and I click on fertilizer expense, I can see right there's the $60,000 went to fertilizer expense the way I wanted it. And if I go to seed expense, I can see there's the $40,000 going to seed expense. So what have I done? Again, the way I want it for taxes, I've got it off to the expense, but now I'm keeping track of the balance of the prepaid. So let's roll ahead and say it's March, and let's say we're going to start taking delivery of some of that seed. I guess one other thing real quick, I guess before I'll show one last thing. So those of you that are on either that are on the pro value, the pro package of Traction, the other place you'll see these prepays is if I do a market value balance sheet or accrual balance sheet, this is also where I'll see it. So here it's going to show, if I narrow this down, I get the right entity, Stark Farming is my entity. Here I will see I've got $100,000 of prepaid as an asset on my books, and down below my prepaid expense has it here. So the accrual counting market value side of it, this is just like inventory, it's showing it as an asset. Okay. So next step we want to do is let's say that we take delivery of some of that seed actually. So to do this one is a little bit different. We're going to say I took delivery of some seed for 40,000. We'll say actually I took delivery for more than what I had on the prepay. I'm going to write a check for the difference. So I'm going to add a new payment in here. I'm going to do it as of today, pick Farmers Co-op. First thing I want to do is pick out the seed that I'm buying. So I'm going to go to inputs. I'm going to pick my seed. I'll pick out the seed variety that I'm buying. Buying it for my 26 crop year now. We're going to say I'm buying 200 bags at $325 a bag. So it's $65,000 of seed. Now, I'm not going to write a check for $65,000 because some of that is going to come off my prepay. So what I want to do is reduce that $65,000. So if I add a row, I'm going to say I want to pay with the prepay. And I'm going to pick out that prepaid seed and say that I'm using it. Shows me right there, I've got a $40,000 balance on it. I want to use all $40,000 of that prepaid seed. I'm going to write a check for the difference on it. So if I save that, want to update my input cost. Yep, I just bought some new inputs, so I want that cost to get reflected in the cost on that input. Say yes. And what I'll see now, if I go down again and look at that prepay expense report, now I should see I've only got the fertilizer left. I've now used up that seed. The other thing I'll see if I look at my cash income statement, I should see in 2026, if I roll forward to this year, I should see some seed expense for the $25,000 I wrote. And sure enough, what I see here is because I wrote a check this year for the difference, I can see I got 65,000 minus the prepay, gives me $25,000 of expense this year. And as far as question about can you seed the prepay to a specific field, the prepay is not going to go to a field, but once I've got that seed for an input, that's where it can be used as a field record. So that seed that I bought, that could get assigned to field record from John Deere or Climate, or a field record I put in manually. Right, the last step, kind of just to show where it is, if I look at the market value balance sheet again, what I'll see now is my prepaid expense as of today is reduced. I look at prepaid expense, I've only got the fertilizer, that seed, if I could see it. That apparently had some bags before I bought it, but that amount's added to the bags in the seed inventory. And as I used it on fields, it would come out of that. So I'll open it up. Any questions? Any questions on prepays or loans, or any questions on anything? Quiet group, Brian.
Yeah, I think most of the questions was just really involved the market value balance sheet and what tier that fell under. I know we kind of bounced a little bit around the different tiers this morning, but really the majority of what you did, I guess the first half of the webinar was all basic for the most part until you got into the market value balance sheet. But there is some really nice reports in that basic level for that loan tracking. But once you get into the prepays, we definitely had to switch gears there on the tiers. That definitely required at least the plus level. And then when you get into the more, I'll call it more advanced reporting, the market value balance sheet, the accrual balance sheet, that's a little bit of the pro level kind of snuck in there on you. Looks like you have a question here. What if you only put partial inputs in and don't use all the pay with prepay right away? Will it leave it uncategorized?
That prepay is going to hang out there. So at some point, if the co-op would refund it to you, you just do a deposit and help. Sport will probably have to help you if you get money back on that. We don't have an easy way on that side of it, but you can, even if that prepay was prepaid seed and you wound up using it for fertilizer, you can use that prepay to buy any input out there. And I see somebody from Success is jumping in there as far as a refund on it. I'm betting we've got a knowledge base article for how to do a refund on it. Does that help, Amanda?
Yes. Another question, when can we see an export report in the equipment? I
Yeah, that's,
assume he's talking about like a report of all the equipment listed, maybe?
yeah, we don't have that today. I mean, I can say it's on the to-do list, but I don't have a time frame for that one. Brian's subscription level. Is there a way they can see what their subscription level is?
Um, that's a good question. I know we've been making some changes with some of the newer accounts. Um, there's a like a billing portal that you can go in and see what subscription you're on. But if you have been with us for a while, I don't think we've converted some of those existing customers over to the new billing portal quite yet. Um,
I think the
so
thing I would
let
actually
us
see
know. We can
if you,
look you up. I think, yeah, go ahead, Scott.
yeah, if you go to accounting and go to reports, if you've got market value and if you've got budget, that means you've got pro. If you don't have market value, but you've got accounts payable and prepaid expense, that means you have plus. If you only have cash and don't have accrual or market value, you've got basic. So basic is easy. I don't have anything accrual or market. Pro, I've got market and budget is the easy one. It's kind of obvious on it. Does that help?
Hey Scott, this is David. Could you go through an example of a booking? So, for example, we might commit to a price on so many tons of fertilizer, but then pay for it later. So there's no cash at the time that we're doing that. Could you do that for us, please?
Does the booking have actually a set value on it?
Yes, it would, because it'd be,
Okay.
we've agreed to so many dollars per ton, but we're paying at a later date.
And it's going to be a prepay, or is it going to be actually an input?
That's what I'm asking you. How do we handle that?
It will go as a bill. So bill is anything that I'm getting billed for that I'm not going to pay till later where I've got a set amount. So when I do a new bill, I pick out the entity here. I pick out who it's to. Now, how you do the next step depends on what you're looking at. If it's got a set input, if I've got a certain fertilizer with a certain quantity and a certain price, and I'm going to 100% take delivery of that guaranteed, you can do items, you can do inputs, and you can pick the input here. And the main thing to say, if I do this, it is going to add that input to my inventory on my balance sheet. So if you're happy having it in your inventory and your balance sheet and it's guaranteed, that's the way to do it. My gut says probably the more logical one is it's probably a prepay, and that you'll just go down to prepays, just like I did with the payment, do a prepay expense, pick out what it's for, put the amount in, and I can set a bill up for it. So this is not going to put any seed fertilizer expense on my cash books. I haven't written the check for it. It's going to set it up as a bill. And then when I actually pay that bill, then it's going to actually put the expense on it. But that's kind of out there so you can have a record of it so you can use it. Does that make sense, David?
Yeah, it does. I guess I hadn't thought about the being in inventory versus using a prepay. It's not putting that in inventory. So yes, that's what I needed to know.
Technically, it should only be inventory if you've taken delivery on it. But I know a lot of people, if I'm guaranteed to take delivery of it, it's an easier step just to do it as the inventory versus the prepay. And I see a question there. How would it be handled if farmer bought his 26 seed in December, put it on Pioneer Financial? Okay, so Pioneer Financial, I guess the question's going to come down to, is that going to be deductible? I'm guessing if it is a loan and you're going to actually write it off as you paid for it in 25, then I would set up a loan for that Pioneer Financial and do that amount just doing it as a positive to the prepay and a negative to that loan to get it that way. If it's not deductible, if it's more of a bill, then you can add it in this bills area as a bill. Odds are it's probably a loan, and odds are you'd want to set it up in the chart of accounts as a loan. Probably the only difference in that, the loan I set up, that loan is probably going to be in the notes payable short term. Did that help, Ellen? I think the other side of that, to even make it easier, if that loan is a short term, I'll just go ahead and do it real quick. So we're going to assume that Pioneer one is a loan here. So I would pick out my entity. I'm going to just set it up as a line of credit. I'm going to make it function as a checking account, and I'm just going to call this my has a $0 balance. I'm going to skip all the details on that. But what that'll let me do, so now if I do a prepay from that loan account, I can pull that account up in the loan. I can just add a payment in there. Say if I did more prepay, I could pick out that prepay expense, or if I want to do it as an input, I could do it as an input. But I could do that prepay expense, pick out what it's for, put in the amount, set my date back to 25. And that is going to set it up as a loan if I get my date range back last year. I can see that coming out. It's going to set it up as a loan. So when I actually pay it off, I'll pay that loan off, but also puts that prepay out there. So odds are that's the way you want to do that, is what I'm guessing. Any other questions? And Brian, did I miss any?
I don't think you missed any. But yeah, a lot of great questions this morning. Yeah, I think we're probably about ready to wrap up here. I know we went over. I appreciate y'all for hanging in there with us. We'll just kind of hit this last slide here and just kind of talk about some upcoming events to be aware of. So tomorrow we're tackling some really basic things in Traction. We call it Accounting 101. So that's tomorrow. So feel free to sign up for that one. And you can sign up for all these events on our website. There's also a link down at the bottom here. If you just type that in, you'll get right where you need to be to sign up. Then we have some future webinars here for next week. We got a good one for crop sales and grain payments. And then we'll be touching on patronage dividends and hedging a little bit later in the month. We'll also be touching also the Traction Accounting 101 again. So we're always updating this list. So I think keep your eyes open, and we'll try to communicate the fastest we can through email. So that way you're all aware of the upcoming webinars. But we really appreciate you all joining. Really enjoy these and hearing your feedback and making the product better. So I think that's all from our end. Unless you have some more questions here, I think we will close it down for today, and we will see you at the next one.